All right, welcome back, everybody. Today we have Josh back with us today on Dirty Boots Capital. Josh, welcome.
Thank you for having me, Tony.
Excellent. Josh, I've had you on the channel before. I love chatting with you. We were just out at Rebel Capitalist Live in Miami. We saw some great speakers. Maybe tell me a little bit about what were your takeaways from that experience?
It was just mind blowing. For me personally, I don't attend those types of events to listen to the speakers because you can get all of that information for free online, very easily access. You go to these kind of conferences to network and to grow the people that you surround yourself with. And it was probably the most successful Rebel Capitalist Live I have ever had. As I have already visited one of the speakers that was there because you talk to them, you become friends, and then you go see them. And another one that I'm going to be flying out to see in a few months, and you meet. It's not even just the speakers that you meet; it's the
Yeah.
people. I mean, me and Tony originally met at a Rebel Capitalist Live, and it is just fantastic. The people that you meet there are just absolutely out of this world, and it is difficult to only be around rich people and to not get rich yourself.
Yeah. Yeah, it really is a community. And that's the thing I love about it, right? You mentioned, you can get a lot of that information on YouTube, for example. A lot of these folks have their own YouTube channels, which is great. But then you get to see them in live and have these one-on-one type conversations during these networking sessions. And yeah, likewise here, I'm scheduled to meet up with a couple of the speakers who, just I'll be honest with you, like 2 years ago, I'm watching these folks on YouTube and I'm like, wow, this is so great. I'm so excited about this sort of stuff. And then now here I am. It's a very surreal moment to be like, yeah, come out to my farm or come
Yeah,
out to my
yeah.
bug house or come out to my right. Being invited out to these places, it's a very surreal moment because you look up to these folks as somewhat of, thought leaders and somewhat of a hero in the community, working to spread goodness. So and another example of just great stuff happening is, just yesterday I did a video, or actually a couple of days ago, I did a video with George Gammon, right? How cool is that? Here I am again, 2 years ago, I'm watching George on YouTube, right? Sitting on my couch and saying, hey, this guy is, the cat's meow. Look at this great stuff he's putting out, right? And now here I am. I'm chatting with him on, at these events, and we're just kind of tossing different ideas around, trying to figure it all out. And that's one of the things I liked about the Rebel Capitalist event. And I'll mention Brent Johnson by name because he is such a nice guy, such a gentleman. If you ever have the chance to, for the viewers, to meet with him in person, I would absolutely, encourage you to have a conversation with him, because here I am having a conversation with him and we're tossing these ideas back and forth. And, he was so gracious, such a gentleman to say, Tony, we're all just trying to figure this out. None of us have the answer, right? The silver bullet as to which way things are going to go up or down. We're all just trying to figure this out. And it was so kind of heartwarming for me to hear that message, because all too often you watch Bloomberg, you watch some of these media outlets, and you have these economists or whatnot pontificating that, we're not in a recession or we are in a recession. And, they're so sure of it that it kind of makes you, I don't know, if they're that sure, it kind of makes me question whether they're telling the full truth, because I don't know if these days you can ever be sure of anything that's out there. It can change on a dime. So anyway, so that was Rebel Capitalist Live. That was a great event. If the viewers haven't been out there, I think George is going to be doing another one. I think he had mentioned April of next year. So that's probably keep your eyes on the lookout for the next one. It's great. So Josh, tell us a little bit about, so your background is you graduated high school, you decided not to go to college. Tell us a little bit about why you didn't decide to go to college and what you are actually working on today. I know you have a lot of different outlets going on.
Yeah, so about a year, 2 years ago, I was a junior in high school, and I was just I was running a very successful business with my best friend. It was going fantastic, but of course, COVID comes and everything shut down. You're stuck in your house, and you're like, well, why am I locked in my house right now? So you kind of start reading online, you start reading books, and you kind of realize, you know what? Maybe I am more libertarian minded. I am a greedy capitalist entrepreneur, and I want to continue to do this. So I, of course, did not go to college, and I was just searching for people that I wanted to be like. There were were people like Doug Casey, like George Gammon, whose lifestyles that I thought were very fascinating and I wanted to kind of emulate. So I was fortunate enough to reach out to George Gammon. After I read Atlas Shrugged, I had a rebel capitalist tattoo on my leg. And of course, I'm now working for him today. But it was mainly just because I was very, very scared of kind of having the same type of job as my parents do. Just you go to school and you get good grades. And then because you're a good student, you then become a good employee. And from that, you just sit in an office all day, kind of just rotting your life away. And I was just terrified of that. And that pushed me to work very hard to kind of actively pursue the lifestyle that I'm living now. So I'm working for George Gammon. That's pretty much it.
Oh, but there's more than that. You have two YouTube channels that you're.
Oh, actually, yeah, I'm also working for Ken McElroy.
And you're working for Ken, right? So,
Yeah.
you're what you're really doing is you're immersing yourself in these businesses to get an education, right? Are you doing tasks to help these guys? Sure. But really what it is they are providing you with the education you need, real world, real life education, as opposed to just book smarts kind of a thing. And I'm not poo-pooing book smarts. I mean, hey, there's a place in time for everything. But your path, Josh, is you're really boots on the ground, rolling up your sleeves, actually doing the work and seeing how these guys grew successful businesses. So you're working for George, you're working for Ken McElroy, you have your two YouTube channels, right? Which that alone, anybody who's wanting to have just a greater knowledge or just try to understand things better that's happening in the world. A lot of us out there are saying, start a YouTube channel, right? Start talking about these things. The more you talk about it, the better you understand it. And the more connection, the more community you start to form with others out there who are trying to understand this world around us. And so for anybody who's looking to grow and trying to, I don't know, do better for themselves and trying to figure these things out, start a YouTube channel. It's easy. It's cheap. It's like, I don't know, Josh, it cost me like, I don't know, less than $500,
Well, it is definitely a cost though. Like people think that all you're gonna do is just gonna start rolling in money, and that is certainly not the case.
Yeah, it's certainly not a
You
money
can do it for
maker.
free easy though.
Yeah,
and it's infinitely scalable. You can start any business around it, and you can make a ton of money long term. But you have to put the initial capital in, which is your time, and it costs a lot of it.
Yeah, definitely. But that's part of the education is to spend your time figuring these things out, and now you become a much more valuable person. One of the things I share with people, and I share in my book as well, is really look at the value you bring forward to your community, to another person, to whatever it is, to an organization. Don't look at just as your value as the profession that you do day in and day out, whether you're a teacher or an engineer or a fireman or a policewoman, right? Try to think of yourself on a more macro, bigger scale here, because you really want to bring the most value possible to an audience, right? So in Josh's case, he's learning a lot of information from George and from Ken, two of the smartest people that I know out there. And then Josh is doing his YouTube channel, so he's providing value through his YouTube channel, right? As far as for me, I do real estate consulting, I do syndications, I do real estate investments. I try to help people from all those angles, but then I also have my book where I work to educate people, and that's value that I provide to them. And then just potentially launching not only the YouTube channel to be able to hopefully provide value to the viewers, but also launch into speaking gigs. So you kind of see how that all works.
And that's in retirement, Tony.
And that's it. Yeah, I've already retired once. I retired. Yeah, so it's been fun. These are things we like to do, we enjoy doing, and so we want to bring this message to the people and the community and try to help people grow and learn and do better for themselves, because you're not going to learn this stuff in school. most likely. Nobody's going to teach it to you there. So we want to be able to help you as much as we possibly can. So with that, Josh, take us into your thoughts on the, I'll say, pending recession.
Yeah, so I would go as far as to say not only are we in a recession today, but we have been in a depression since 2008. And before you get your hearts off, let me explain. A recession is really just defined by 2 quarters of negative GDP growth. A depression is more of just a prolonged period of economic constraint and substantial less growth than you should have. If you just look at a chart of 2008, well, prior to 2008, we were on a very strict trend line of extreme prosperity, economic growth, wealth was being created, goods and services were increasing at vast rates. After 2008, the GFC, the entire economic system collapsed and it has yet to recover. So we have recovered from where we were in 2008. But if this was the trend line going up beforehand, the new trend line is substantially lower than that. And it is trillions of dollars from where we are today, from where we would be if we were still growing at the same rate. And that is a depressed state of economic activity, or a depression defined in many different economic books. So now let's talk about the recession, which was the main question, where you were kind of asking, are we in a recession today? And I would argue, yes, we can kind of see that. The first quarter, we had negative GDP growth. And this quarter, the Atlanta Fed, they came out with their GDP projections a few days ago, and they came in at negative 1%, which would be in a recession. But then the following day, the day after that, July 1st, they came out with their updated GDP projections, and it was actually negative 2.1% GDP. That would mean that we are in a pretty deep recession at the moment. But I mean, any indicator has been screaming this at you for months. If it was the inverted yield curve, which has virtually 100% probability success in the past, or the economy has just been absolutely horrible. It doesn't really take a economic genius to suggest that we have been in a recession.
Yeah. So not only has the government, the Fed, I'll say, come out and say GDP is going to be negative, right? So they're telling us, right? We experienced it last quarter. We had negative GDP, right? And they're telling us going forward, they are expecting negative 2.1 GDP, right? So, yeah. And then to your point, I'll bring up the yield curve so that we can take a quick look at that. But this is the 10-year minus the 2-year Treasury rates. And so I'm going to zoom out here to go back as far as I can. So let's just look at 1989 here. We went negative below the line, right? So we went negative, and then shortly thereafter, we entered into a recession. This gray band here is a recession, right? Same thing here. Back in 2000, we went negative in terms of the inverted yield curve, and then we entered into a recession. Same thing here. And so what's happening today, and I'm going to zoom in on this area here today. All right, let's look at that. So this is what Josh is talking about. Even earlier this year, April 4th time period, we went negative, which would have signaled a recession is on our doorstep. And so the yield curve fixed itself for some period of time, but now we are back into negative territory here. July 6th, we are negative 0.04. So this is what Josh is talking about. Is this is very, and I'll zoom back out, this inversion that happens is a very good predictor of a recession, and we can see that in the chart here. So yeah, good data, good explanation, Josh. So in terms of investing, right? I know sometimes folks pucker up during these times of a recession and don't want to invest because it's uncertain times, right? Which way is the economy going to go? Are we going to go further south in terms of what the NASDAQ is doing and the S&P 500 and the Dow? Those are, I think, around negative 20 yield for the year, I think. I think they're down 20%. Where would you be investing today, Josh?
I'm currently not actively buying anything, but there's a lot of things that are starting to get very interesting. Like I would say a lot of shipping companies are now starting to trade below their actual earnings. If you look at Zim or DAC, which is just two different shipping companies that are just producing cash flow, but I'm not buying those right now. If you look at uranium, I mean, it is looking extremely attractive. Long term, I'm as bullish as you can get on uranium for 1,000 different factors, but I'm not currently buying at this moment because I do think our recession is probably going to get deeper and things will continue to get cheaper. If you look at oil, I would love to buy more copper, mainly just a variety of different commodities, gold and silver. I think it could have an exceptional run over the next few years, but that's much long-term view. I'm currently not really buying anything now. I kind of flip-flop between trading the short side and a few different names, but that's pretty much the only thing that I'm actively doing at the moment.
Yeah, and you like we speak with a lot of different investors out there, and it's pretty much the same story for the most part. We're all just so folks know, we're all kind of in a wait and see holding pattern here. We believe things are going to go lower. We think the recession is going to drive commodities lower. A lot of us are really focused on commodities. Like Josh said, uranium is a big one. Silver, I think, closed somewhere around $19 and change
Yeah, that's
today,
fantastic.
right? Yeah, we're starting to get into a territory where um, we want to be able to start taking a look at some of these, just watching, putting them on our watch list, right? And watching the economy, see what the Fed does with the rates. Chances are here in July, I think at the end of July, Josh, correct me if I'm wrong, I think they're having another meeting. They're gonna probably raise rates again at the end of
Most
July,
most likely.
right? Probably 50 basis points, I would imagine. So that takes it up to what, 2.25. So that's another spot that we watch, right? 2.25, because they've never been able to get the Fed fund rate any higher than the previous high, and the previous high was 2.25, right, Josh?
I'm not 100% sure on
Yeah,
those
so
numbers.
it was in that range, 2.25 or 2.5. I forget exactly, but that was the previous high that the Fed was able to get the Fed fund rate. So, if they raise it at the end of July, another 50 basis points, now that puts us in that approaching the previous high. And that becomes a problem for the Fed because they've never been able to get it any higher than the previous high because the economy goes into a recession. So that's just another data point that we look for to determine which way the economy is going. And so there's all these little things that many of us are looking for just to not to, so to speak, catch the bottom, but definitely be able to understand whether we still have a lot more downward momentum. And there's many of us out there who are pretty much thinking we do. We're not at the bottom yet. So a lot of us are still watching. Josh, what about real estate? What do you think about real estate?
It's dependent on place to place. If you can get a cash flowing property that is covering your mortgage, I mean, absolutely, I would do that because you're getting positive cash flow. Or in other countries, I know George has quite a few properties in Medellin, and he has seen some extremely attractive deals, like RV ratios, like 2% type stuff that are just
Wow.
very, very attractive that you just aren't going to get in the States. So it's dependent upon where you are. Overall, I am bearish because mortgage rates are going up. I see demand kind of going down, but I would not be surprised if rents stay elevated, especially in those CB classes. I think A's have a long way to go down just because everyone got a ton of money. They fly out to Miami, down to Scottsdale, down to into the major cities, driving up the prices of those super expensive apartments. But I could see those having a lot of downhill movement. But I think the C's, B's are going to be relatively okay.
Yeah, it's one of the things that Kenny talks about, and I think a lot of folks in real estate talks about, right? When you go into a recession, folks always need a place to live. They're not going to go live under a bridge. So,
Hopefully.
right. So typically what happens is they move down the economic scale. So folks who were living in class A properties, they most likely are going to move down to those Class B type properties, and people in Class B that can no longer afford those move down into the Class C type properties. So this is why Josh is saying he likes Class B, he likes Class C, and I think he's right to look at those. One of the things I share with folks is, and not because I do it, in terms of helping people with, but just trying to take a look at syndications for anybody out there looking to place their money into real estate. It is difficult. It can be difficult to make a property cash flow these days. And so with syndications, we go bigger. We buy 100 doors at a time. And so through economies of scale and efficiencies, we are able to make those properties cash flow. So it's not that people have stopped doing deals. It's just that we are moving how we are doing deals, right? I used to buy properties myself. I know it can be difficult to buy a cash flowing property today. I know, I look at them each and every day. And so that's why I've moved towards syndications, because with a group of investors, you can definitely get a better cash flowing, less risk asset under your name. So that's just a tidbit for anybody looking to do some real estate investing today. And there's tons of different syndicators out there. You got to vet them, know who you're dealing with, blah, 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 all that good stuff. But anyway, Josh, we're coming up on our time here. Any last nuggets you want to share with folks? What are your YouTube handles there?
So I have a macro after dark, where we kind of talk about what we talked about today, more the economical side of what's going on. And then I have a confirming your biases, which is much more YouTube unfriendly, and just about anything opposite that the mainstream media says we'll probably be talking about.
I love it. I love it. Josh, you are a rock star. You do great things, man. Love you, brother. All right. We're going to end it here. Thanks for coming on, Josh. And yeah, for the viewers, go ahead and smash that like button if this was something this conversation you liked. We'll do more of them and we'll go from there. Thanks, everyone.
Thank you, Tony.
All right.